Guys, welcome. This is after a long time we are making new video, so I decided to change the way I'm going to talk to you guys. We are going to talk more about gold in the coming times because I see it is delivering very nice. This is August and there is a lot of fuckery going on right now, but Nasdaq is delivering okay, gold is delivering nice, and I have everything drawn up for you guys. I'm going to turn it on in a second. I have notes and everything. So in this video we'll cover what I expect from gold in the next month or month and a half. So this is very simple and easy for everyone to understand. We have short-term targets, we have long-term targets, we have what's happening right now, what I expect tomorrow, what I expect this week, this month, August, next month. So I will cover everything right here for you guys. Okay, so this is currently Monday, 15th August, worst month for traders. We are having a lot of consolidations. There is very little liquidity in the market, so we aren't really, price isn't really running. So there is clear price action on the higher time frame, but when you drop intraday to trade, you will see that you'll never manage to get how much you want, because maybe in August it's not because you will be too greedy in case you're not profitable, but it will be because they're taking the nearest liquidity, nearest opposing liquidity intraday throughout the whole day. So there's no really, you can't really gauge the days where it's going to run like usual. So it's better to stay away. I had some luck flipping an account in the beginning of August, first week, which was still a very nice time to trade, and I stopped trading the second week of August, which was last week, because the conditions are they're just not good for trading. So I'm looking forward to next month. So I'm going to turn on these drawings for you guys. So I have a few notes regarding current events, and if you want to do yourself a favor, just don't read them. This is for me, so I can talk to you guys and not get lost. So as you can see, we went down to 1680 levels on gold and rallied up after that. I called actually 1670, because this is where sell side is from way below, and once we do revisit these levels, we can't simply go through them because there is no liquidity there yet. So the last time where we had liquidity here was 13 years ago, so this was 2009. So there is no one still in a long, maybe very little people. If they haven't already took many profits, they are stupid. So there is no one here. We need to create new sell side liquidity. So they chose to do this during July, the loss of momentum part. So I'm talking about this whole part, and then stagnation, slow reversal, order block. They leave this gap open. So sometimes they will leave gaps open, and then they can be used instead of as a point of reversal. You can use them as targets. So we have now two confluence targets, or three, here, and this fair value gap, which is just below. So and then they chose August for creating these bullish order blocks. As you can see, these bullish order blocks, I'm not talking about breaker, but these 1, 2, 3, and this was the last one, failed. So, and then stagnation inside this bearish fair value gap. So this is very important. Now we have resting liquidity buy side above here, which I don't see us breaking very soon. I see this as a confluence target with something that I will show you above in a second, but I want to cover something more. So right now, this current daily candle, as long as we stay here or below, this can be the second candle of a bearish fair value gap inside of a daily fair value gap. This is confluence, very important to distinguish good from bad setups and high from low probability. So we are stagnating right now. We broke market structure as long as we stay here. So I expect tomorrow we do a little bit upside move. Then I wouldn't really trade on tomorrow, but obviously if this candle closes here or close to here or below, you know how the third candle of fair value gap looks. So it will be a little bit stagnation, maybe go down. It's always different. So we'll stay clear for now. We just know that after tomorrow and after this week, in my opinion, the bias will be bearish, because we have sell side resting below here on 1750 and the fair value gap 1740 even below, and our final destination, in my opinion, which is below 1680. So what I want to say is, if this candle turns out to be the second candle of the bearish fair value gap, we'll have buy side above here 1810, so which is our short-term target once we break this sell side and this sell side. But this is my expectation that we'll go here, but there is also possibility if we, how August is, and I don't know, anything can happen, but this is the shortest next target that we have. This is our main target, and I expect this to be broken later. I don't expect it to be broken right now. This is short-term buy side. So we have short-term sell side, long-term sell side, long-term under quotes, because I don't know how long it will take. It can be delivered very fast depending on how they want it. So I have a feeling that we'll revisit below 1750 in any case. This is the short-term sell side. Just as I know that we'll definitely revisit here after breaking sell side. So the last thing I wanted to talk to you about is, if we look up, we have old breakaway gap on 1960 to 1970. When we were back here in this section here, like these order blocks and everything, so I mean these, when we're creating, I thought that it's possible that we will revisit here below, delivering down here and having this fake rally, but instead they left it as a long-term liquidity target. So this is what I was talking, our short-term buy side target and our long-term buy side target. So I expected us to feel this way back when we were here, before we deliver down to here, but this is now our objective. So this is still an important gap. Instead of entry, we can use this gap now for a target. So there is no need to enter here. Anyway guys, I hope you enjoyed this video. Thank you for watching this.